Today on Go Ahead Ask, we've talked about buying real estate inside of your self-directed IRA or your self-directed individual 401k plan. But how exactly do you actually buy real estate inside of your self-directed IRA or 401k? Let's unravel that today on Go Ahead Ask.
Building wealth in real estate? Let the Exeter Group take the mystery out of how it's done on Go Ahead Ask.
Welcome to Go Ahead Ask podcast by the Exeter Group, where we unravel the mystery of investment real estate and attempt to provide investors with better quality educational information so they can make better informed investment decisions. I'm your host today. I'm Bill Exeter, and Chief Executive Officer of Exeter Trust Company. And inside the Exeter group of companies includes Exeter 1031 Exchange Services, which is a qualified intermediary for 1031 exchange transactions, and they administer all types of 1031 exchanges in all 50 states. It also includes Exeter Trust Company, and Exeter Trust Company serves as custodian for self-directed IRAs, for individual 401k plans. It also acts as trustee for title holding trust or land trusts, for general custody services, and also acts as escrow agent for specialty holding escrows when those needs arise. As always on Go Ahead Ask, we encourage you to post questions or topics you would like us to cover. You can email them to us at ask@exeterco.com, or you can call us at area code 619-239-3091. If you love Go Ahead Ask, please like it, subscribe to it, share it, and comment on it, and we will reply to all of the comments on Go Ahead Ask. Today, the podcast is entitled Unraveling the Mystery of Buying Real Estate Inside of Your Self-Directed IRA. Listeners and clients often ask about our custody services for self-directed IRAs and individual 401k plans. And specifically, how do you buy real estate inside of the self-directed IRA? We had a high-level discussion on self-directed IRAs and 401k plans back under episode number 10 of Go Ahead Ask. But we realized with all the questions that a lot of people were looking for more specific details. How exactly do I buy real estate inside of my IRA? So we thought we should unravel that mystery today on Go Ahead Ask and really dive into the nuts and bolts. So now let's go ahead and unravel the mystery of buying real estate inside of your self-directed IRA or self-directed individual 401k plan. First of all, a couple refresher points. What is a self-directed IRA? Don't forget that all individual retirement accounts, all individual 401k plans are self-directed because you choose what institution to put them at. So they're all self-directed. The industry has chosen to call self-directed accounts as those that have a broader array of investment options. And typically when you get into the term self-directed, what they mean is you have the ability to buy non-traditional assets or alternative assets, such as real estate inside of your IRA. So it's really about the IRA custodian and what options they allow you to invest in. So really the steps are this. You've probably at this point decided, I'm going to invest in real estate. And I want to do the real estate investments inside of my self-directed IRA. So the next step is you have to evaluate and choose the IRA custodian that will administer your self-directed IRA or 401k plan. So you really want to go through and make sure you find an IRA custodian that has expertise in real estate and can help you through the process, especially help you through issues when they come up, when problems arise, etc. Once you've chosen that IRA custodian, then you transfer the IRA to the new custodian. It's the same IRA, it's just a brand new IRA custodian. And those topics are generally covered in our episode 10. And now you're ready to actually choose your investment. So you begin working with the real estate providers that you've decided to work with. So let's get into how do you actually buy real estate inside of your IRA. Now I struggled with this and I thought, should we provide sample forms as an exhibit as we're going through the podcast today? And the challenge is that real estate and closing processes and customs, et cetera, vary from state to state and region to region, et cetera. And so using a specific form actually might be helpful, but it could also be confusing if it's a form that's not familiar or customary in that particular area that you're investing in. So I thought, let's talk more generalities. We're going to get very specific on how to do it, but in terms of documents, we'll be more general. So that way, hopefully it relates to your specific area. So a couple of reminders. Remember that you are not the buyer or the investor in whatever real estate asset you have chosen to get involved with. The IRA is actually the investor or the buyer of real estate. So that's the key point to kind of keep in mind there. So first of all, what type of real estate can your IRA invest in? Well, basically any type of real estate. Probably the more common asset classes, if you will, would be the real estate itself, or what they call fee simple title. So you actually buy the real estate and you're on legal title to the real estate, but it's not you, but it's actually your IRA. Other forms might be a promissory note secured by a deed of trust or secured by a mortgage. Those are usually referred to as a deed of trust or a mortgage, but technically that's a promissory note. You're lending money out of your IRA to somebody, and that loan is secured by a deed of trust or a mortgage against the property. It's a lien against the property. So if they fail to pay that note back to your IRA can foreclose and take the property back. So promissory notes would be a general category. You can also invest in tax lien certificates. With that, generally it's a city or a county or even a state that collects some type of property tax. And for whatever reason, the property owner has failed to pay the property taxes. So they issue a tax lien certificate. Effectively, you, or in this case, your IRA, is lending funds out of your self-directed IRA or self-directed 401k plan to the city, the county, or the state government. And so you're really fronting the property tax dollars. And in return, you get the tax lien certificate. So it's a lien against the real estate. Now, hopefully, the property owner is going to reimburse you for that or pay the property taxes. And there's generally a statutory rate of return. Some of them can be very lucrative. It may be 25 or 50% guaranteed or statutory return. More about that later. You might decide to buy into some type of a real estate fund, and it might be a fund that actually invests in real estate. It might be a fund that invests in promissory notes. So it kind of depends, but you're investing in a fund, and then the fund invests in some type of a real estate asset. Or you might want to buy direct interests in LLCs or limited partnerships or corporations or REITs, real estate investment trusts, that actually buy real estate inside of the entity. So those are really kind of the more common strategies for real estate investments. Again, just a reminder, keep in mind, you're not the investor, you're not buying the real estate, you're not buying the entity. The IRA custodian is going to be on title, either legal title or on the ownership certificate as custodian of your self-directed IRA. So it's very important to make that differentiation. You as an individual are not the buyer or the investor or the lender. It's the IRA, which is a separate legal entity from yourself. Closing processes, customs, even laws and regulations vary from geographic areas and regions. So that's why it's difficult to drill down to detail and documentation, because they're all different. So the first point is, when you're investing in real estate of any type through your self-directed IRA, is you're going to work with your normal real estate team, whether that be your realtor, your escrow officer, your title company, your real estate closing attorney, et cetera. We're just going to plug right into that existing team. They're going to do everything they would normally do. The only difference is the buyer or the investor or the lender in that situation, depending on what type of asset you're buying or investing in, is going to be Exeter Trust Company as IRA custodian for your IRA. It's not going to be you as an individual. Keep in mind that most closing agents, unless you've worked with them quite a bit, have probably no experience in using self-directed IRAs or self-directed individual 401k plans to invest in various real estate assets. So it's probably a foreign topic to them. And they certainly don't understand the documentation and how that retirement account works. So part of our job is to make sure we walk them through the process and make sure that all of the details are accurate. Keep in mind the closing procedures, the closing documentation, the settlement statements, they're all going to vary a little bit based on region. So we have to kind of adapt the process to the various customs in your particular area. So with that, let's jump right into each of the asset classes. I'm going to kind of go one by one. So let's assume that you have decided you want to actually buy real estate, fee simple title, and inside your IRA and have the IRA be on title to the real estate. So what do? Well, you're going to typically do exactly what you would normally do in your geographic area. Some areas you start off with a letter of intent. Other areas you make an offer. Some areas you just go straight to the purchase and sale agreement. So it depends on what's customary in your particular area. But in whatever you do, let's assume that you're starting off with a letter of intent and you make an offer through the letter of intent. That letter of intent is going to come from the IRA custodian. So in our case, the letter would come from us, or if it's a standard form document, the entity making the offer would be Exeter Trust Company as IRA custodian for IRA number 12345. So keep in mind, it's not you as the individual making the offer. It's the IRA custodian on behalf of your self-directed IRA. That's important because we don't want to create a prohibited transaction. We don't want to blur or blend you as an individual and the IRA. So that's very, very critical. Probably one of the most common questions we get in this area is, I've already made an offer, I've already gone under contract, but I haven't closed yet. There is a risk that if you assign the offer or assign the purchase and sale agreement to the IRA custodian, you've started off as an individual, you've ended up with your IRA account, there could be a potential prohibited transaction there if the IRS under audit could show that your IRA or you benefited by combining those two or by assigning that. So it's best practices is never start off with you making the offer and then assigning it to your IRA. Always have the trust company as your IRA custodian make the offer to begin with. So that's critical. So we make the offer and it's accepted, and then you go into the contract. And again, remember, it changes or varies from geographic area. So at this point, we have a purchase and sale agreement drafted with Exeter Trust Company as IRA custodian for IRA number 12345 as the entity that has made an offer, has gone under contract, and is now the buyer of that particular real estate. Very important to make that differentiation. I stress that over and over because it's amazing how many times people forget that and then put offers or contracts under their individual name and then attempt to assign it. So it's very important that we don't do that. So the buyer is your IRA custodian for or on behalf of your self-directed IRA. So then we go through the closing process, and there's going to be a closing statement, any documentation that go along with that. There's probably title insurance or title commitments, et cetera. All of those are going to be listed or listing the name of Exeter Trust Company as IRA custodian for IRA number 12345. So again, every document, every transaction, anything it might be, is going to be under the name of the IRA custodian. When they're ready to close, the closing agent, whether it be an escrow officer, a title company, a closing attorney, will contact you or us and say, okay, we're ready for funds. And then you would authorize the IRA custodian to fund that particular investment. And they'll send a wire transfer to the closing agent's trust account. At that point, when the closing occurs, the settlement statement, the HUD statement, or accounting statement, depends on the geographic area what they call that, but there's different names for it. The closing statement is going to reflect the buyer as Exeter Trust Company as IRA custodian for IRA number 12345. So very, very important that everything show the IRA as the buyer. Now, we close on the particular transaction. The closing agent records the deed, and the deed will be recorded in the name of your IRA custodian of your IRA number, blah, blah, blah. And you can add for the benefit of, or FBO, and your name if you'd like. Some people want their name on there. Some people do not. That's really a personal preference. Now we own the real estate inside of that self-directed IRA. Next step is we start collecting the income. So as income payments come in, whether it be rental payments, lease payments, whatever the revenue stream is, those payments have to go to the self-directed IRA. You never want to take those payments and process them or deposit them into your personal checking account. They are not personal investments, it's an IRA investment. So whether they pay rent by check or if they want to send a wire transfer, ACH, whatever it might be, the payment goes directly to the IRA custodian for deposit or credit to your self-directed individual retirement account or 401k plan. So again, that's critical. All expenses related to the real estate, property taxes and everything else that you're responsible for paying as the owner and landlord have to be paid by the self-directed retirement account, no exceptions. We'll talk later about what happens when your IRA runs out of money. That's a whole different issue, and that is a problem when you're dealing with real estate, because it's possible if the tenant moves out and the revenue stream ceases, you may have expenses ongoing that could drain your self-directed IRA of cash flow. So that certainly is an issue. So again, revenue goes to the IRA, expenses are paid out of the IRA. Keep in mind, you don't own the real estate, so you cannot depreciate the real estate on your income tax return because you don't own it, the IRA does. And the IRA is not, at this point at least, not going to file a tax return or have any kind of depreciation benefits. Okay, with that, that's a quick overview of real estate. Let's go into the next kind of asset class, which is promissory notes. And I'd already quickly introduced that as promissory notes secured by real estate. A lot of folks refer to them as deeds of trust or mortgages. Technically, what you are investing in is a promissory note. The IRA is lending money to somebody, and in return, it gets a promissory note executed by the borrower that promises to pay back that loan to the self-directed IRA. The promissory note is secured or protected by recording a deed of trust or a mortgage against the real estate. The deed of trust or the mortgage is a lien against the real property. That means that if the borrower fails to pay back the note, if they go into default under the terms of the note, the owner, which is the self-directed IRA, has the right to foreclose against that property. We're not going to talk about foreclosure today. There are different types of foreclosures. It depends on the state. Some states are a deed of trust state, some states are a mortgage state, and those are different animals. But both are liens against the real estate that protect you and secure you in the event that promissory note is paid off. But what the IRA is really investing in or funding is the promissory note. So how do you work with a promissory note? Well, there's different ways to do that. Some investors, quite a few investors, will actually work directly with a broker who probably specializes in either hard money loans, private money loans, or just a general brokerage in working with promissory notes. They will package an offering. It might be a large note, might be a small note, but they'll package it, put it together. They'll do all the underwriting and then give the package to you or multiple investors, and you review it, decide if you want to fund or invest in that particular note. And if you do, then there's a very similar, as a financing or refinance, depending on what it is, closing process. So very similar to buying real estate, but in this case, you're going to be the lender through your self-directed IRA. I probably should have said that a little differently, because remember, you're not the lender. The self-directed IRA is the lender. So in this case, let's just say you're working through or with a broker that specializes in hard money loans or private money loans. They've given you a package, you reviewed it, you've looked at the underwriting, you've looked at the collateral, which is the real estate, you've looked at the valuations, etc., and you've decided you like what you see and you want to have your self-directed IRA invest in that particular promissory note. So we're going to go through the same type of closing process that we went through with buying real estate, except in this case, the lender is the self-directed IRA. So in this case, the IRA custodian is not the buyer, they're not the seller, they're actually serving as the lender in the closing process. So they're going to go through the typical closing process. The IRA custodian, as custodian of your IRA, is going to do the same as any other lender would do. They're going to do the same documentation. You're going to probably have a promissory note and a deed of trust or a mortgage drafted by the broker. You're going to review that to make sure you're comfortable with it. And when the closing is ready to occur, They're going to call us as the lender. We're going to get your authorization, and we're going to fund that closing, that note into the closing process. It's going to close. The promissory note is payable to Exeter Trust Company as custodian of your IRA. The deed of trust of the mortgage is for the benefit of your IRA, and that will be recorded as a lien against the property to secure that promissory note. And the closing occurs. You are now the lender through your self-directed IRA. So now what happens? So now we've closed. The self-directed IRA has actually lent money to a borrower. The borrower is now likely going to make monthly payments. Those monthly payments come back to the IRA. The IRA custodian is going to accept those payments, and they're going to credit the self-directed IRA for principal payments and interest payments and whatever that breakdown may be. So keep in mind, all loan payments have to go back to the self-directed IRA because it is the lender, not you. Now, any income, interest income, any points, any document fees, anything that you as the lender have charged or that the broker is charging, and generally the broker will have an agreement between you and the self-directed IRA as to what the arrangement is. So any income that's being allocated to the investor, which is the self-directed IRA, would be credited to the self-directed IRA. So if the broker gives the investor any points, those points get credited to the self-directed IRA. Usually the document fees and the points are probably retained by the broker. Any interest income, of course, as the investor or lender would go to the self-directed IRA, and all principal payments would go to the self-directed IRA. So that's a quick recap on promissory note investing and how that might work. We're going to take a quick break right now for a message from our sponsor.
Today's episode is sponsored by Realized 1031. Realized helps clients in their 1031 exchange by using DSTs to build turnkey, diversified, tax-efficient portfolios of professionally managed, commercial-grade properties, all designed to help you meet your investment goals. To learn more, visit www.realized1031.com. Securities offered on this website are offered exclusively through Thornhill Securities, Inc., a registered broker-dealer and member of FINRA SIPC.
And we're back. Now let's expand on unraveling the mystery of buying real estate inside of your self-directed IRA. So we talked about buying real estate. We've talked about having the self-directed IRA act as the lender and lend funds to somebody who is the borrower. Now let's talk about buying into real estate funds or buying into an LLC or a limited partnership or a corporation where there's multiple investors involved in those entities. There are a number of different ways to do that. In fact, going back to promissory notes, some of the hard money lenders and private money lenders that used to have you invest directly in a specific promissory note secured by a deed of trust or mortgage are now beginning to convert that so they really have funds. And so maybe a fund of hard money loans or private money loans or real estate or something like that. And so you, rather than having to make decisions on every single mortgage note that comes into play, you just make a decision to invest in the actual fund, such as an LLC. Your self-directed IRA would actually be the investor and would buy into the LLC. And then the fund would then distribute any profits out to your self-directed IRA. So how does that work? Well, typically a fund is going to have some type of a sponsor or a syndicator that's responsible for putting the entire fund together. They do all the legal work to put the fund together, et cetera. And then once it's ready to go and investors fund the fund or invest in the fund, then they use those cash proceeds to invest based on what the fund is designed or set up to do. So generally, these funds are offered as a Reg D securities offering or something similar to that. So you're going to actually evaluate the private offering or offering memoranda. There's generally an offering package that they'll give you. It talks about the investment and all the risks, et cetera. You should review that with your tax advisors and your legal advisors to make sure you really understand what you're investing in, what the risks are, et cetera. So once you've done that, you've worked with the sponsor, you've kind of gone through what their program is, you've checked out the sponsor, done your due diligence on the sponsor, then you've started to review the various offering agreements that are out there that the sponsor is providing and go through the due diligence on that. And then you say, okay, I'm ready to buy this particular investment. I want to invest in this particular fund through my self-directed IRA. The next step is generally they have some type of a subscription agreement or offering agreement that you will sign. In this case, remember, again, sorry, I keep harping on this, but again, you're not the investor, the self-directed IRA is. So you would authorize us as Exeter Trust Company to execute the subscription agreement or subscription offering documents as IRA custodian for your self-directed IRA. Once that's executed and they're ready to do a closing, usually the closing is very simple. You send in the subscription agreement with whatever documents they request. They probably want legal documents on the entity investing, such as your IRA. They probably want a tax identification number, like a W-9 or something. And then we submit either a wire transfer. If they want a physical check, we can do that. So now the self-directed IRA has invested in this fund. Remember, the investor is the self-directed IRA. And now we're to the point where you've closed. The self-directed IRA now owns a number of units or shares or membership interests in the fund. And then monthly, quarterly, annually, whatever the planned distribution is, you're going to get distributions that are sent or made payable to Exeter Trust Company as IRA custodian for IRA number 12345. So that's kind of a quick overview of funds, whether it be a fund that invests in hard money loans or private money loans, or whether you're investing in an LLC or limited partnerships or corporations. Kind of a subset of this is things that people have called checkbook IRAs, where the IRA will actually form and set up its own its own single member limited liability company. The sole member and or sole manager of the LLC is usually the self-directed IRA, with the one exception of the manager position. And the manager position is probably you as the IRA owner, although it could be somebody else you designate. And then your IRA then funds the LLC by capitalizing it with IRA cash out of the IRA. Now you have an LLC that is owned 100% by the IRA. It is an IRA asset. It's not your asset. But you could be the manager of that entity, and then you would have a checkbook under that LLC, so that the LLC has a checking account at a bank, and you would be the signer as manager of that. So you could certainly set up and fund an LLC, and then have what they call checkbook control over that LLC. You have to be very, very careful with checkbook LLCs. It's very easy to accidentally create a prohibited transaction because you just didn't realize it was a prohibited transaction. So be very careful with checkbook LLCs. In a lot of cases, if you don't need quick turnaround, et cetera, I would say just stay away from that and have the IRA custodian take care of it for you. One of the next categories or asset classes I wanted to talk about was buying tax lien certificates. We kind of talked about that at the beginning, that a tax lien certificate was a scenario where a city, a county, or maybe even a state collects property taxes or some type of taxes, and the property owner has failed to make a payment on those property taxes. Usually it covers a period of time, a 1, 2, 3 year period. So then the jurisdiction issues a tax lien certificate. The investor can buy or fund the taxes that are backdated or past due, sorry. So you're funding the past due taxes in return for receiving this tax lien certificate. It is a lien against the real estate, and it generally has a statutory rate of return. Some states can be as high as 25 or 50%. So it could be a very nice annualized return. And hopefully the property owner brings the property taxes current, which includes paying that statutory interest rate. If they fail to bring it current, then you as the, I shouldn't say you, the IRA as the owner of the tax lien certificate can foreclose against the property and recover their assets. And in a lot of cases, you make more money because you get to foreclose, take the property back, and then resell it, hopefully at a markup. So how do we invest in tax lien certificates? That is going to vary widely. It really depends on the city, the county, or even the state and the jurisdiction, basically, and how they issue the tax lien certificates. So they're very different. It's hard to get too specific here, but basically you're going to contact the county. In most cases, these are issued by counties. The county will tell you exactly how the tax lien certificate works, whether there's a bidding process, et cetera, maybe they're sold at auction. In any event, keep in mind, you're not the buyer, you're not the investor. It's the IRA custodian on behalf of your self-directed IRA. So the IRA custodian will be the entity that bids on these or makes offers on these tax lien certificates. And if it's the winning bidder, then it's the one that's going to go through and fund the tax lien purchase. Again, the county will determine how that's done. Typically, that's done by sending checks or delivering checks to the county and funding that particular tax lien certificate. So there's a lot of nuances there, but that's essentially how that works. You end up with a tax lien certificate, and then hopefully the property owner again redeems the certificate by paying the property taxes current plus the statutory rate of return. So it can be very, very lucrative there. So those are kind of the general asset classes that you'll find in self-directed IRAs when you're trying to buy real estate. There's certainly all sorts of other options out there. Today, we're just focusing on these specific real estate related classes and how the day-to-day, step-by-step process works. A couple of reminders that come back from our podcast number 10 is prohibited transactions. So go back and listen to the podcast 10 for more details on prohibited transactions. Prohibited transactions basically say you can't self-deal. So you can't lend to yourself, you can't buy real estate that you're going to live in, things like that. So be very careful that you don't create some type of prohibited transaction based on the real estate you're buying inside your IRA. There's a lot of moving parts there, so it's always important to have your tax advisor and or legal advisor review it to make sure it's not a prohibited transaction. We also talk about investment considerations there, but we're talking specifically about real estate today. So with real estate, you have to look at what you're buying and ask the question, does it make sense to buy this in my individual name and not inside my self-directed IRA? Or does it make sense to buy it in my self-directed IRA? And specifically where I'm going with that is, let's say you actually buy real estate. You're buying fee simple title in the real property. You're actually buying the real estate itself. Does it make sense? Well, keep in mind that it depends on your IRA. Let's say it's a traditional IRA. Traditional IRAs, when you retire, distribute cash out to you, and those are considered ordinary income and taxable as ordinary income. And it's going to be taxed at whatever ordinary income tax rates are applicable at that point in time when you retire, which can, of course, go up and down, et cetera. It depends on your tax bracket. When you buy real estate in your individual name, if it goes up in value and you sell, you have the ability to do 1031 exchanges to defer the tax, or if you just sell it cash out and pay the tax, then you're subject to capital gain tax rates, which are typically much less than ordinary income tax rates. So you have to balance the two and say, does it make sense to buy real estate in my individual name? Because then I get depreciation benefits, which shelter other income. I get capital gain tax rates. I'll get a step up in cost basis when I pass on, et cetera. Or do I want to do it inside my self-directed IRA? And is that justified? Because I don't get to depreciate the property. The profit is going to become ordinary income if it's a traditional IRA. If it's a Roth IRA, then of course it's tax-free at retirement if you meet the requirements. So there's no right or wrong answer. It depends on what's right for you. But you do need to analyze real estate to see which makes better sense for you. Then when you look at the other assets we've talked about, so your promissory notes, your tax lien certificates, your hard money, private money loans, funds, et cetera, most of those are always ordinary income anyways. So if you can put it inside your IRA, it makes perfect sense. That way it's either tax deferred or tax free, and it allows you to build your net worth much faster because you're not paying federal and state taxes. So investment considerations vary. There's no right or wrong answer. It depends on what's right for you. You also want to be very careful that you are not actively managing these investments. So if you buy real estate, you should not be the one that's actively managing the property. You can't go out and do the repairs and things like that because now it's no longer passive investments, and it's supposed to be a passive investment. You don't want to appear to be running a business out of your IRA. That can get all sorts of crazy. And you have to be careful what you invest in. Certain partnerships you invest in may be considered a operating business. So with all of those things I just mentioned, you may trigger unrelated business taxable income, UBTI, or some people call it UBIT. So again, talk to your tax advisor to make sure what you're investing in, especially real estate, does not trigger UBIT. If you're going to buy real estate, most investors will buy it with all cash out of their self-directed IRA. It is possible to buy real estate, use some of your cash for a down payment through your IRA, and then borrow or leverage the real estate. But if you leverage real estate or any type of an asset inside of your self-directed IRA, you're probably going to be subject to UDFI, unrelated debt finance income. So that's something, again, you want to talk to your tax advisor, make sure you really, really understand what that's going to mean to you. And finally, we mentioned, well, if you invest in real estate, the tenant moves out, et cetera, or you lend money and the borrower stops paying, your income into the IRA stops, but your expenses continue. So what if your IRA runs out of funds? And we quickly address that also in episode 10. But those are issues you have to plan for. What if my cash flow stops, my inbound cash flow stops, but my expenses, my outbound cash flow continues? What happens if my IRA runs out of funds? So that's something that there are solutions for, but you have to address that as well. We don't have time to kind of go into those details, but I wanted to bring those up. Those are reminders. Go back to episode 10 to kind of get a refresher on that, or feel free to call us. We'd be happy to brainstorm with what your particular situation is, what you're looking at. So that's kind of a wrap up with investing or buying real estate and real estate related assets inside of the self-directed IRA or your self-directed individual 401k plan. Again, remember, you're not the investor, you're not the lender, you're not the buyer. The IRA custodian is as or on behalf of your IRA. With that, thank you so much for listening to Go Ahead Ask podcast today. We very much appreciate that. If you have any questions or any topics you want us to cover, please email them to us at ask@exeterco.com or give us a call, area code 619-239-3091. Be happy to chat, answer any questions you might have, kind of bounce strategies off of us. Also, if you love our podcast, please like it, share it, subscribe to it, or comment on it. We will respond to all of the comments, et cetera. We very much appreciate that. So you can find us on just about all of the social media platforms out there, including Facebook and YouTube. With that, thank you so much for listening today. We look forward to talking to you next time.
Thank you for listening to Go Ahead Ask with the Exeter Group. Join us for our next episode when we further unravel the mysteries of real estate.